Yeah, I'm Robert Kaz, Mortgage Minute on Friday, July 26th. Hey, we're always looking at different polls and results that come out. I feel that they're quite accurate in helping point towards what's happening in the economy. And a recent one from BMO is quite interesting. It's a new poll that suggested that more Canadians are in debt this year and taking longer to pay off their accounts. This BMO poll found that 83% of Canadians surveyed admitted to having some form of debt, an increase from 74% a year earlier. And the poll also found that the average amount of monthly debt repayment has fallen by 13% from a national average of $1,138 per month down to $986. Now, the provinces which are leading the charge in repaying their debts is Alberta, where the average is about $1,225, and the province in which the least amount of debt is being repaid is Quebec at $768. Now, the results could point to two different things. Either the fact that people are having issues making these higher payments, or B, that they're just simply in no hurry and they've gotten quite comfortable with the low rates that we have. And this low rate environment that we've been living in has allowed folks to take on more debt while ensuring that the affordability factor is still there and they can manage it. Now, the annual poll also found that nearly half of those surveyed said their household debt has decreased in the past 5 years, so that's good, compared with 28% who said it has increased during that period. More than half also said they plan to be debt-free within 5 years, so again, good news. The majority of homeowners also said they anticipate being mortgage-free within 10 years, and a third of them plan to do it in 5 years, and a whopping 29% plan on paying down their mortgage within the next year. So again, those would point to some good things. Now, the fact is that when we're looking at these numbers, the main thing we should be taking away from all of this is the fact that we should never get complacent and comfortable with debt. Our goal should always be to pay it down effectively, quickly, and expeditiously. The bottom line is that rates are historically low. What a great opportunity to increase those payments, whack down that debt before those rates start rising. I mean, the bottom line is that we can't afford, when the rates finally start going up, to be caught with our pants down, so to speak, because at the end of the day, that's going to leave you in quite a mess, especially if rates take a reasonable increase. And we all know, and all the economists are pointing to the fact that they will over time go back up. I remember in 2008 we were doing mortgages that were 5-year terms around 5.5%. Now, we had dropped down to as low as 2.79 a while ago, and there's nothing that says that within 5 years they're not going to be back up to that rate again. So now's the time. Hammer down that debt. And as far as debt goes, the Canadians polled also said that their mortgage accounted, basically the Canadians that were polled, said that the largest source of debt for them, 34% of them said it was a mortgage, followed by car payments at 19%, and student loans accounted for 14%. So it appeared that mortgages still are the largest component, followed by, like I said, car loans and student loans, and then of course would be credit lines and all those things. The smart way to look at your debt is to look at how and what you can apply towards it. A simple rule of thumb is if you can pay off smaller amounts quicker, eliminate them, then take the extra surplus cash you have and gradually work your way up that food chain. And another way to look at it is sometimes the things that have the highest interest rate, focus on getting rid of them first, and as soon as you eliminate those, you've got surplus cash to apply towards other things. Again, give us a call anytime you like. We got some great ideas with debt, debt tips and those sorts of things. We'd be happy to assist you in that realm. As far as if you're looking for a mortgage, like I said many times over and over, don't hesitate. Give us a call here at the Auxilium team. We're always ready, willing, and able to help, and we'll certainly look at your overall situation and your entire debt picture. And there are times when we look at this and we tell people, hey, you know what, now's not a good time to make that purchase. Maybe it's you're better off waiting or doing that sort of thing. Or sometimes what we do with our mortgages is look at restructuring your debt in more efficient ways. So if you are looking for a restructure, and a remortgage may just be exactly what the doctor ordered in that case, again, give us a call. We'd be more than happy to help you out with that. Anyways, enjoy your weekend that lies ahead, and I look forward to seeing you on Monday.